Everybody, welcome to our first Monday morning training. Like Al was mentioning right before we kicked off, we're going to do this every week, and what we want to focus on is one particular carrier and one of our flagship carriers. That's American National, and every week we're going to dive into one of their product offerings, and we're also going to do a little bit of building and recruiting. But to kick off our training, we're going to start with American National's term coverage. Now, American National, like I said, one of our flagship carriers, been around since 1904, located here in Houston. We have a great, strong relationship with them. We have a lot to do with them too, and they offer pretty much everything that we need to offer to our clients. So let's go ahead and get started here a little bit. You've seen this in our presentation on Thursday nights and our weekly presentations. You could get living benefits, either rent it, own it, retire with it, and today we're going to focus on renting, and that gives you that coverage till 70 or 80. It's lowest cost short term, most expensive long term. I'm going to actually show you what that means today. We're going to go through an actual case that I've been working on here in the last 30 days. But I wanted to just highlight some of the advantages, and term has a place, and I want to show you some of the key features that are available through American National's or ANICO's term. Okay, so first things, they're guaranteed premiums for the length of the term, okay? And they have no cost living benefits. That's the key. The key is to have the no cost living benefits. You could issue these anywhere between ages 18 and 70, and I'll show you where you can find this information. And they're available in 5 different increments or 5 different time frames. And here's what I mean by that. You have what's called ART. That's annual renewable term. That means the premiums are only guaranteed for 1 year, and every year it renews and the premiums go up, okay? You also have a 10-year, which is obviously guaranteed for 10 years, a 15-year term, which premiums are guaranteed for 15 years, 20-year, and 30-year. And that fixes the cost for that amount of time, okay? So when you're working with people, depending upon their budget, and we want to build it around their budget, we also want to make sure that we're covering the need as best we can, but you have a lot of options, okay? Now, the shorter the term, the less expensive it is. So annual renewable term is the least expensive of all term products because they only have to guarantee the coverage for a year. As you get further and further along and have a longer and longer commitment, the premiums tend to go up, but still very, very competitive. Okay, so I want you to understand that even with term, you have options. There's also what we call guaranteed conversions, okay? And what that means is if you own a term product today, you have to start where you are. And some people really, really love the IUL, but maybe they're not in a position to put the kind of money in it to make it effective, right? So sometimes you have to start where you are, but here's the good news. They can get a term policy and convert that to a permanent policy in the future. In fact, American National, one of the few carriers who actually allow you to do term-to-term conversion. So somebody could actually get an ART and then convert that to either a 10, 15, 20, or 30-year term in the future as well. But like I was talking about just a second ago, that term-to-permanent conversion is a big deal because now it's guaranteed. And what I mean by that is once you're approved for the term, you can convert that at any time before the end of the term or before age 65. You can convert that to a permanent product. And what they'll do is they'll give you what they call conversion credits. So they'll take 12 months worth of premiums that you paid into your term and apply that to either your IUL or GUL. So this is a big deal, folks, because life happens. Sometimes we gain a little weight, or sometimes we have a medical event, or maybe we become uninsurable. But if we get coverage through term, we are guaranteed that coverage if we want to convert it to a permanent product. So these are just some of the key features that I wanted to share with you because everybody knows about term and they all believe that term is the same, and it is. Well, ours is better because it gives you that no cost living benefits. It gives you the options to pick how many years that you want it. And it also gives you the options to convert it to either a longer term or a permanent solution, which will guarantee you coverage to the day that you die. So now in our slides, through our presentations on Thursdays and through our weekly presentations, we show you this when this really kind of depicts what our living benefits are. Well, these are the actual living benefits from American National's term. or any other of their products, right? They have the most extensive suite of living benefits with all of our carriers. They have 16 critical illness triggers. Their chronic illness trigger and terminal illness trigger goes to 24 months, and they have the highest maximum payout as well at $2 million. So we focus on American National because they can really be a one-stop shop, and frankly, it's the best option for living benefits for the client. So we want to do right by the client. We want to make sure that we're getting them exactly what they need for the exact amount that they want. We can be competitive. We can give them the best living benefits on the market with the highest payout. And we have all those options as far as those key features I just went over when we're discussing term. Okay. So with that said, what I'm going to do is I'm going to break down a little case study, and I can bring this back up so we can refer back to it. But this is an actual case that I've been working on, or that I worked on in the last 30 days, okay? This client did not want to pay more than he was paying for his current policy that he had owned for 8 years. He had a preferred rating with that company. He had no health conditions arise. He hadn't gained any major weight. He was still relatively young, but he was not in a position to put more money in to get a more permanent product, okay? So the first thing that we have to do is take a needs analysis. And for lack of space, I didn't put the actual needs analysis here. I just took the information. You know, he was born in 1979, 6'1", 190 pounds, no issues, no medical. Now, the insurance need, when we did the needs analysis, it really opened up his eyes to say, you know, I don't have enough coverage right now. And we found that he needed $750,000 in coverage once we went through that simple needs analysis. Then we looked at the budget, okay? And the budget, he's not buying any stocks or anything like that. His current life insurance premium was $81 a month, and that was a $250,000 Primerica policy that he had owned for 8 years. So he wanted to be in that range, that $81, because he was one of those people who is very frugal and conservative and didn't really want to spend more because he didn't really understand the value of IUL, or he wasn't in a position to do that just yet. Okay, so we actually did talk about it, and the goal is to convert it here in a year or so because he's thinking about joining the team and earning some additional income. But right now, we wanted to keep him where he's at. Okay, so this is the case study that I'm going to show you. And now what I'm going to do is I'm going to go ahead and share my screen with, okay. So you can see the website here, okay? So we have the case study, and like I said, I can always bring that back up for informational purposes, but I wanted to show you what we do now as far as once we get the information, where do we go? How do we get the quotes? How do we run the illustration? How do we get the information to present to the client? And there are a few things that I want to point out before I get into the actual illustrator. This is American National's independent marketing group website. So you can get to this website if you're appointed with us, going to img.anicoweb.com. Now, if you're appointed, you can access the expert office. If you're not appointed, you can still access the site and have access to some of the sales tools, marketing materials, and other things that are here. But to use the illustrators, you need to be appointed. So before I get into the illustrator, I want to just go through a couple of these tabs with you and show you that there's information here that you can use and present to the people that you're talking to directly from the company. When you open up sales tools right here, they have these pre-approved ads. They have a portfolio of life products. You know, if you click on pre-approved ads here, it'll bring up another screen, and here are all the products that they offer. Here's just some things that you can use for a consumer basis. So because we're talking about term, let me show you what they have here as far as term is concerned, okay? This right here is just a quick comparison between all the different prices and ranges that you could have for a particular client. So with this particular marketing piece, you could go and say, hey, listen, if you're 35 years old and you're looking for an annual renewable term, it would cost you $145 for the year for $500,000 worth of coverage. Folks, that's super, super competitive, okay? And you can see the price ranges from annual renewable all the way to 30 years. Well, this is available to you to use for the consumer, okay? So these are just little tools that you should have access to. They give you some facts, term facts as well. Here's the other thing that I always like to point out. Under life, they give you an explanation of all the products that they have. So again, this is the term. So let's go here to ANICO signature term. And right here gives you a quick overview of exactly how their term works. What are the benefits? How does the conversion credits work? Can you do a term to term and all these other things? They give you the bands as far as what's going to require medicals versus what's not going to have to require medicals. They give you the issue ages and the minimum face amounts, 50,000, right? And this is for ART. As we go to 10-year, you can see the issue ages goes to 18 to 70, okay? Well, that's why this is where we can find the information. So if you have a client who's 63 years old and just wants to get a term policy for whatever reason, well, we have the ability to write that policy. Will it be as inexpensive as it would be for a 25-year-old? Of course not. But it still would be very, very competitive, and it still would include living benefits. Okay, so these are all things that you have access to that you can use as a tool in your toolbox when you're talking to your clients, when you're talking to the people that you know about living benefits, okay? Even over here, there's some brochures. They give you some frequently asked questions. They give you a guide to the living benefits rider. They also show you how to do term conversions. And if you wanted to see if it's approved in your state, you can click here and find out. It is approved in all states. There is some discrepancies with a few states. You know, California doesn't have all 16 critical illness triggers. They only have 13. Connecticut, which didn't have living benefits for a little while, has now added living benefits. So they update these as they go, but it is available to us in every state. So if you want to check to see where you're at and what's available, you can click on state approvals and find out. There are a lot of tools just on this site for American National that are at our disposal to use at whatever time to help us further not only our knowledge, but our clients' knowledge of what we have to offer. The other thing that I always bring up while I am quoting a case or after I do a simple needs analysis is this page right here, underwriting guidelines. You know, you can call in, you can get a risk assessment, and they're going to ask you a few questions. But if you have a basic understanding of your client's health, you can actually go to the underwriting guidelines that have been set by American National, and you can get a feel for where your client may fall. And now this is quite extensive. It's 28 pages long, but it has everything you need on here, okay? It shows you how to submit a life application, where things need to go. It gives you what would be required, based on your client's age and face amount as far as medical underwriting or things like that. So you can use these tables to find out, okay, well, if I have someone who's 30 years old and they're applying for 500,000, well, now he falls into Express Plus or she falls into Express Plus. And they're going to do these 4 things: Medical Information Bureau, script check, risk classifier, and motor vehicle report. That's all going to be done by the home office. And this right here, this little diamond, you can go to the legend and it says no automatic exam is required. The agent orders the exam at American National's discretion. So again, we have that Express Plus up to $1 million, where if the client is approved for that, we do not require medicals. But this will tell you exactly what you would need in order to get this case through underwriting and approved. So just a little few tools here that are very, very important so you can set the expectations and lay the groundwork for what your client can expect. There's also down here, what I want to point out is, preferred risk. What do they have? Some people say, well, do I have high blood pressure? Does that automatically disqualify me? No, absolutely not. In fact, with high blood pressure, you could actually get Preferred Plus. And here's what it says: to age 60, if your blood pressure is XYZ, then you could get Preferred Plus. Again, there's a lot of information on here, but it's available to you. And what I would recommend is, you can download a copy of this, you can save it to your desktop, you can access it while you're on the IMG site. But what I normally look at, if I know that they have health conditions, I'll look for those health conditions. But what I normally look at is this bill table here, because a lot of what we do is based on height and weight, right? Obviously medical condition too, but height and weight play a big factor as well. So with our particular case, we said that he was 6'1", 190 pounds. So we look at this bill table here, and I go over to 6'1", and it says the weight is, the low has to be 140 and the high is 217. There's a good possibility that he'd get Preferred Plus, right? Now over here, he also falls in the preferred category, and he also falls into Standard Plus. So there's a lot of different options here, and I know it's a little bit vague, but you can have an idea that maybe your client would be better than standard, or maybe he would just be standard, because on the very next page, it shows you the non-preferred bill table. Okay, so here are your standard rates, and here are your substandard rates to all the way to decline. This is a good indicator for what you may want to quote your client at. Now, general rule of thumb, I always quote them at standard. In very rare circumstances, when I know that maybe they're already preferred somewhere else, I'll use preferred, but I always quote at standard, because I would rather under-promise and over-deliver rather than have to go back to the client and say, well, we said you were preferred, but you're actually standard, and now it costs you a little bit more. So to err on the side of caution, I would absolutely 100% recommend that you quote everybody at a standard level and let the chips fall where they may. Now, that doesn't mean that you can't tell them, hey, if you get preferred, this is where you may be, but we don't make those decisions. That's all based on the underwriting and what they find in your medical information. So this is just a tool, again, to use to find out where your clients may fall. And the last thing that I want to show you on here, which I think is absolutely brilliant, and it's been a lifesaver in a few situations, is they actually have a list of common conditions that require additional labs and whatnot. So if you have someone who's diabetic, regardless if they're Express Plus or not, they're going to have to require medicals, and it'll tell you all here. Okay, so everything that you have will be here. The other thing that I absolutely really like, if I scroll down a little bit more, is this impairment guide. Okay, so you may have somebody who has a condition. Maybe they have, anxiety, been clinically diagnosed with anxiety, and they're on medication. You say, okay, well, they're healthy. They don't take any other medication but anxiety. But if you look right here, anxiety says it's going to be between standard and table 2. You know at this point that they're more than likely going to get a standard rating at the best, okay? So I'll give you another example. I'm actually working with a client right now who called me and said, Mike, I have MS. Is there a way for me to get coverage? So I said, I'm not sure, but let me find out. And I scrolled down here, and I actually found that multiple sclerosis is not a disqualifier. Now, it is a little bit more expensive. It's a table 2, but you know what? It's not a disqualifier. So she could potentially get living benefits. This impairment chart is a tremendous tool to go ahead and find where your clients may fall, okay? And this is just another part of the arsenal, so you can give the best quality information to the client when you go ahead and present it to them. Okay, so this is something that I absolutely 100% recommend that you save a copy, you have it on your desktop or in your computer somewhere. You can access this when you're putting together, after you get the simple needs analysis, when you're putting together illustrations, you can access this and find out really pretty accurately where your client actually may fall, and you can quote accordingly. Again, good rule of thumb, quote at standard, let the underwriters tell you that they'll be better, and then you go from there. So these are the underwriting guidelines. It doesn't hurt to ask if you see a condition that's not listed on there. It doesn't hurt to call the FEG concierge, ANICO concierge, and ask for what they call a risk assessment. They'll get you in touch with an underwriter, and that underwriter could actually take the information from your simple needs analysis and tell you what their best guess would be based on the information provided. That's always another surefire way to get the most accurate information as we're presenting them to the client. So now that I kind of went over a little bit where everything's at, where you can find them, I want to actually go into the software where you can use to produce these illustrations and produce these quotes, okay? So once you're appointed, you click on this expert office, and it brings up a list of different options, but we're gonna click over here on Expert Illustrator. And what that's gonna do is that's going to produce another screen which takes you to where you input the data, right? We've all heard the expression garbage in, garbage out. We have to get really good at taking information, okay? Because the better the information that we take, the better the output that we'll get on the back end, okay? So once you're appointed, you go to Expert Illustrator, you click on Create Illustration, and it's going to bring up, and they're going to ask if you want to create a new client or if you want to choose an existing client to create a new illustration for. So in this case, we're going to create a new client, okay? And that client is going to be called value client. We're going to put in his birthday, and that's November the 29th, 1979. It's going to produce his age for you so you don't have to guess or do the math, and we know that he is male. Okay, so once we click next, it's going to bring up, okay, well, what product do you want to quote? All right, and that's where you choose here. Make sure that wherever you're at, your state is deemed. Obviously, we're here in Texas, so this here, you can see universal life, term life. These are the two as far as life coverage that you're going to use. They do offer a whole life, but why would you have whole life when you could have index universal life? Again, there's a place for it, but IUL is just a better form of that. And here you're also annuities. So let's click on term life. And it's going to be ANICO's signature term. That's the only option that they have. And we're going to go ahead and click create. And it's going to start to input some of the information that we put together. Okay, now to do a term illustration is fairly simple. All right, we want to see how much coverage we can get for the client. So the client's 38 years old. He is eligible to get up to 30 years worth of coverage. Now, his current policy was a 30-year term, so I know he's owned it for a little while, but I wanted to show him apples to apples what he has versus what he could. Now, here was the big eye-opener for him when we did the needs analysis. He only had $250,000 worth of coverage, but he needed $750,000. So when I had that conversation with him and I said, you know, Mr. Client, listen, this may be a little bit more, but you need more coverage. You need to understand that with $250,000, that's just not enough for you and your family right now. You need to have more coverage. So let me show you what $750,000 look like with living benefits. Okay, so here what you do, there's two ways that you can do it. You want to pick the rate class, right? He was at a preferred rating, so again, I wanted to show him apples to apples what he would look like. So I clicked preferred nicotine non-user. He's a non-smoker. And then here you have two options. You can either you can solve for the amount of money that they want to spend, or you can find out how much it's going to cost for a certain amount of coverage. I always use input face, okay? And that basically means it's going to tell me what the monthly premiums are for this particular amount of coverage. We know that he needed $750,000. So you just put in $750,000, and I always pick special monthly. That's the most common form, and that's what it's going to show you on a monthly basis. So there's a couple of ways that you can look at this. You can either hit this quick calculator, and it's going to bring up a variety of information. It's going to bring up the annual, semi-annual, quarterly, monthly, and biweekly premiums for this face amount. You can see at a preferred rating for 30 years, it was $86.18, okay? His current premium was $81. So just to give you an idea of how competitive we actually are, he owned that policy for 8 years. He is now 8 years older, and it's only $5 more for 3 times the coverage with living benefits. Now, what I do is I go into the illustration. So I take this illustration, and I'll print a copy for the client as well, but I like to review it to make sure everything is in there. Okay, so term illustrations are relatively simple. They're only 6 pages, but there are a few things that I always point out when I deliver these to the client or when I sit with the client and go through the actual illustration with them. Okay, so this first page here kind of breaks down everything that we just talked about, right? What's the underwriting rate class? You have a preferred nicotine non-user. Again, because he was preferred, that's what I used. What's the death benefit? $750,000. The contract premium, $86.18. And this includes riders, if any, right? And we know what riders are included. Those are the living benefits. It's guaranteed renewable and guaranteed convertible, and that is all spelled out right here, okay?
Mike, the illustration's not showing.
Not showing? All right, sorry.
You're doing new share.
Here we go. Good?
Got it.
Got it. Okay. Sorry, guys. With that said, let me just really briefly go through what it is here. This second page of your term illustration, the term illustration is only 6 pages long, but it's just a quick summary of everything that we have, okay? So we know it's male, preferred non-nicotine user, again, because he was preferred, $750,000 death benefit with living benefits and $86 a month. contract premium. This also shows that it's guaranteed renewable, and it also shows guaranteed convertible, and it tells you exactly how many years until he can convert it. So we said he can either convert it, before the end of the term or by age 65, whichever comes first. The illustration already has calculated that he has a maximum of 27 years to convert this policy into something permanent, okay? Now, down here on the third page, it goes over the riders that are available. And you can have a disability premium waiver. You can also add a children's term rider, but you can see that the accelerated benefits or living benefits are already checked off. We don't have to check the boxes, folks. They're already included. They are at no additional cost. It's included in that $86 a month premium, and he has critical illness, chronic illness, and terminal illness. Now remember, during our presentation, we say you can rent it, and it's the lowest cost short term, but it's the most expensive long term. And let me show you exactly what I mean by that, okay? Here's where we get to what I call the meat and potatoes, the actual money of the policy, how it's guaranteed, what the coverage is, and we go from there. So I'm just going to blow this up just a little bit to make it a little bit easier to see. Okay, so you can see here, this is the end of the year, his age, the guaranteed premium, this is $86 times 12, and they just round it up to the next nearest dollar. That's $1,000 a year, okay, and the death benefit is $750. Well, what do you notice about the 30-year term? What you notice about it is that it doesn't change. This 1,034 does not change for 30 years. It's guaranteed to stay the same for the length of the term, okay? And that guarantees that amount of coverage at $750,000. So until he is age 68, he can guarantee himself to pay no more than $86 a month. That's powerful, folks. He can lock in that premium today while he's young and healthy and own that all the way until age 68, or convert that before he's age 65, okay? So this is very, very powerful. Now, least expensive short-term, most expensive long-term. What happens to this policy if he decides to renew it in year number 31? I want to just highlight this and spend it with you here for a second. The premium goes from $1,000 a year to $47,000, okay? It is not designed to be enforced when you die, and this is what we mean by that. Term does serve a purpose, and it allows you to get living benefits coverage at a very, very inexpensive rate while you're young, while you're healthy, and have that coverage guaranteed for so many years. But once that term expires, it gets outrageously expensive to keep the term. So it's the least expensive short-term, most expensive long-term, and it doesn't have any other benefits other than providing you that need if you need it. So if you die within the 30 years, your family will get the $750,000. If you get sick within the 30 years, you could have access to most of that policy depending upon the severity of the illness. But if neither of those two things happen to you within that 30-year period, the likelihood of you keeping this policy and having it increase from $1,000 a year to $47,000 a year is very, very slim. So we want to make sure that the client understands that, yes, it's inexpensive today, but if you want it to be available to your family when you die, then we may want to look at an alternative option, or we may want to convert this policy as soon as we can to give you that permanent coverage, whether it be guaranteed universal life or indexed universal life. So this is why we say it's not designed to be enforced when you die, because the facts are this, folks: most people who don't die or get sick before their term expires, well, today, if they don't die, because most of them do not have living benefits, they just let it go. And at the end of 30 years, those premiums paid kind of vanish, and because they can't afford to renew it at the new rate, okay? So this is a big, big deal. And this continues all the way. If all the way down till he's age 95 years old, and you can see the premiums are just absolutely outrageous at that point. So you would never keep that. Now, this last page is a fantastic page. It gives you a summary of your living benefits. So here's what would happen if you were age 48, 58, or 67, what it would have as an impact. Now, does that mean that they have to wait until they're 48 years old? No. Or 58? No. They could get sick at any time for any reason, and they could access that policy. But if they had a severe impact at 48 on their mortality based on chronic or critical illness, they could actually access up to $600,000 of that $750,000 policy. A terminal illness, they'd get at $676,000, which is a big deal. So to give them an idea of where they may be and how the living benefits work, and this is how it goes, and they even explain what a minor impact, a moderate impact, or severe impact means in their definition, okay? So this is absolutely 100% accurate. It's a fantastic tool to review with your clients. And here's the other thing that I want you to understand about term. To me, term has a place even if they are doing IUL or GUL, right? Or specifically IUL. And here's what I mean by that. If you buy an IUL, you don't buy an IUL for the coverage or the living benefits, although that's a feature of it. You buy IUL so you can have that cash value growth, so you can have that tax-free income, so you can have something in the future so you don't have to work forever and ever and ever, right? Well, where does term come into all of that? Term comes into all of that because term can provide you a retirement protection plan. So if you have a client who does have IUL, it's not a bad idea to supplement the remaining need or to supplement with a term policy, because if they do get sick and if they do need living benefits, they can access the term for relatively inexpensive, right? They can access that term and protect that cash value that they have in Index Universal Life. So this is a big, big deal, folks, and it gives you an opportunity to have multiple policies on one client. It gives you an opportunity to do better for that client. We know that, permanent policies sometimes don't give us all the need or to give us all the coverage up to $750,000. Maybe he'd only get $300,000. Well, we can supplement that with the term, and we can educate them on why they should have both for the time being, okay? So term policies are very, very powerful, especially when you're working within a limited budget, especially because they have living benefits available. This is a big deal. And to let you know how this case ended up, he actually got preferred plus, and the premiums were less than what he was currently spending. So we actually were able to save him about $4 a month. I know it doesn't sound like a lot, but you got to understand, he was 8 years older. We gave him 3 times the coverage for an additional 30 years. And with that said, we saved him another $50 a year. This was an absolute no-brainer to give you an idea of how competitive we are with the advantages that we have with living benefits. This is very, very powerful. So most people understand term. My best advice is make sure that you're taking the needs analysis correctly. Make sure you're getting the client enough coverage, because in my experience, most people do not have enough. We want to make sure that we're covering the need. Make sure you explain the value of having living benefits, and also make sure you explain that today, right now, you are younger and healthier than you'll ever be. And it makes sense to start where you are. Get the coverage in place today, because we can convert this to a more permanent, more advantageous solution in the future. But if you get it today, you're guaranteed to have this coverage if you decide to convert it. So American National, to me, is our best flagship carrier. It gives us everything that we need. Their terms are incredibly competitively priced throughout the marketplace. They offer the best living benefits on the market with 16 critical illness triggers, and they can advance up to $2 million for living benefits. Folks, this is a very, very powerful tool that allows you to fit it within every budget. You could have budgets as low as $20 and $30 a month, or $50 a month, or in this case, $80 a month, right? And that's not enough to get them into some permanent coverage right now, but it is enough to get them at least something with living benefits, because frankly, that's the most important thing. It's not about the death. It's about, what if I get sick and live? And this can provide that solution to them right now and give them a lot of options in the future. So get real familiar with term, because term is something that can be very easily explained, even for a newly licensed person. When I first joined FEG 5 years ago, and I've only been doing it full time for about 3, but when I first joined FEG, my coach, Leo DeRoyne, who you've heard on the Sunday calls. He's a six-figure earner. He's been a CPA for a long time. He said, if you can understand how term coverage works, if you can understand the value of term, how that works, then it will be a lot easier for you to understand the other products that we have, because term is the foundation. Okay, and everything is based on how that operates. So I got really good at learning term. And why that worked to my advantage is because most people I talked to, that's what they owned. They didn't own GULs or IULs. Some of them owned whole life, but most people own term. So let's show you a direct comparison, apples to apples. This is what you got. This is what you could have. This one you have to die to use. This one will pay you if you get sick too. Which one do you want? And we can get the coverage in place today so we can lock in that client and give them options for the future. So with that said, folks, I'm going to turn it over to Al Carty. He's going to talk to you a little bit about what we do as far as an opportunity aspect and give you some training ideas as to how we can help build this business and share this product with more people. So Al, I'll go ahead and turn it over to you.
Okay, Mike. Hey, great job this morning. And, I think just a couple of add-ons to this here. Remember that with ANICO, once you have a policy in place, all of it or part of it is 100% convertible, okay? So you say, well, this 30-year term, what happens? Well, if this guy has a $750,000 policy, he could convert 250 or 500 to a permanent type plan, which could be a GUL or IUL, right? So this may be where they start, but that doesn't mean that's where they finish, right? They could also convert 100% of this to an IUL policy, and the company would take care of that. And here's the beauty. If they're preferred on the conversion. No questions, no medical, no lab work. It's guaranteed convertible once you're in the policy. So that's why it's important for people to get started, even if it is a term policy, because they can convert all or part of it later on. We do that quite often. I've done that myself, where I bought some placeholders. When I bought my IUL, I bought some term on both myself and Barbara. And then what we did is we converted them to IUL down the road because we maintained that health status and so on and so forth. Okay. So what I'm going to do is I'm going to shift gears a little bit. Obviously, term is one of the easiest ones to talk about. Next week, we're going to go into IUL. In fact, Brent Lundgren is going to handle that call next week. We're going to go into Index Universal Life with the better explanation of how that all works, probably with some case study as well. I think it's important for people to understand how the products work, and this is the simplest form. You saw Mike go through that proposal where you can see all the living benefits in there. I didn't realize, personally, I learned something myself today, that there was an impaired risk tab on the ANICO site where you could actually go down there and have a look to see if somebody had high blood pressure or some other type situation, impaired risk. So that's a great information piece in place for you to learn new business, okay?